Happy Monday, everybody. I hope you had a great weekend. Sorry to say that unlike last week, we actually have a Monday to deal with in this work week and this market week. So let's review last week. Let's preview the week ahead. Today is June 3rd, 2024, and this is your Monday market update. As we start June, Q2 is almost done. 1 month left. How's your quarter going? Check in on our Friday planning videos. We'll talk more about some things to review as we keep moving through the year. Last week, coming out of the holiday weekend, Tuesday markets gapped higher at the open, led by the mega cap tech, the Magnificent Seven. No, the Magnificent One, at least it seems that way. Nvidia was up another 7% on the news that Elon Musk's new AI project was going to use Nvidia chips. Like before, markets could not be held up by just one man's shoulders, and Jensen Huang's shoulders from Nvidia were strong, but they are narrow. So eco data, heightened Middle East tensions, higher oil prices, then even Kashkari from the Fed heads mentioned rate hikes again, which is kryptonite for the market, at least for the short term. One of the other main culprits for the markets was markets not holding the gains was our nemesis, bad treasury auctions. I mentioned this before. There are many forces on rates. We keep talking about the Fed, and then this coming week, other central banks will get into play. But there is also this little thing, actually nearly 35 trillion little things, that is the U.S. debt, or close to 35. And although the U.S. Treasury keeps opening up new credit cards, the rates are not zero anymore. And there are really only a few ways that the government can keep paying its bills: taxes and treasuries. And those are two of the main ones. The U.S. Treasury markets is absorbing a huge amount of new bonds. And with Japan slowing their purchases and China being net sellers as they move a lot of their capital to the gold market, the demand needs to come from elsewhere. So far, we're doing okay. Not good, but okay. The 2-year and 5-year auctions on Wednesday went off poorly. And if auctions keep coming in weak, that weakness brings higher rates. And that's not so good for almost everyone in the stock bull camp. So we have seen this play out before, so keep an eye on it. At the end of the day, the Dow was down 0.5%. S&P was up 1 point, not 1%, but 1 point, roughly flat. And the NASDAQ was up about 0.5%, closing above 17,000 for the first time. No 17,000 hats for this time. On Wednesday, stocks gapped lower at the open. Are you getting whiplash yet? A few culprits this time. Global eco data, German CPI this time, still rising. U.S. eco data was sparse, but what we did get put pressure on rates to go higher. Then at 1 p.m. Eastern came the 7-year Treasury auction, and 3 in a row, poor auctions, rates higher, pressure on stocks. Focus keeps going to the rates. While this is important in the short term, and where it will really be important to watch is, do we see the rate hike idea gain any legs? I maintain, in my opinion, this is not really on the table. It may be in the drawer of the table with all the other Fed tools, but I am still in the camp that there will be no rate cuts or hikes before the election, and then probably not before Q1 2025. This is data dependent, and that's what I think the data is leading to. And almost as important, this Fed is no longer dealing with the Fed watchers who use things like the Greenspan briefcase indicator, for those that remember that. But this Fed is all about no surprises. So keep an ear to the ground about what these Fed heads say. I do not think that they want to surprise markets. Will the markets listen? Not so sure, but I'm here to listen for you, and I'll keep giving you my thoughts on it. All right, well, the rates were enough of a headwind to bring markets down. Recall that last time that rate hike fear took hold, the S&P saw 5,000 again. So let's see. For the day, the Dow was down 1%, S&P down 0.75%, and the NASDAQ was down 0.5%. Quick note, I've been doing these videos for over 3 years now. You know that flowery words come and go, but even with the gaps up, gaps down, tailwinds, headwinds, big days are still measured. So remember that this market still sits on the pillar of rate cuts being the next move, inflation slowing, growth slowing but not falling off a cliff, and the AI enthusiasm. All of this is still in place. So remember, the signal through the noise. Stick to the plan, stay in touch, and we'll keep reviewing it. Selling pressure continues on Thursday as stocks opened and gapped lower again. Markets, especially the mega cap trade, was in the red early, or at least most of it was, reacting to the next bad earnings report from the non-AI stocks, in this case, Salesforce. Believe it or not, Spanish CPI came in hot, and someone cared, really. It does boggle my mind why Spain, the 14th largest economy in the world, the 4th in the EU, is stealing oxygen from the room, but it does. U.S. eco data, bad news on the GDP revision, down. So that's good news for the markets. So yields came off their highs. Pending home sales were downright ugly, and a hard landing was being uttered again. Fed heads kept up their talk enough to hold the markets to the higher for longer narrative. By the end of the day, the Dow was down, mostly Salesforce related, but down over 0.75%. S&P down about 0.5%, and the NASDAQ, actually the worst of the bunch, down a bit over 1%. Now, please recall, when NASDAQ outperforms on the upside for days on end, then underperforms on one day, it's almost expected. So don't think too much of that headline. Okay, wrapping up the week, recall that even with all the noise, all eyes were out for the PCE and core PCE delivered on Friday. And well, the buildup that the business channels made was met with a whimper. It cracks me up when they get the Brady Bunch screen of analysts and the numbers are right in line and there's really little to say. So you get some of the fringe stuff, and that's what happened on Friday. PCE and core PCE were in line, and markets were not too impressed or worried. Markets were edging up all day, but at the end of the month, as the end of the month came in within the last 15 minutes, volume spikes and markets spiked with them. For the day, the Dow closed up 575 points, the best day for that index all year, up 1.5%, up 1.5%. S&P up over 0.75%, and down, and the Nasdaq was down just a hair. A week was one. The week was not one to write home about. The Dow was down 1%, S&P down 0.5%, the Nasdaq was down a bit over 1%. But May was a nice month overall. The Dow was up 2.5%, S&P up almost 5%, and the Nasdaq was up over 6.75%. Not a bad May to put in the books. With May in the books, let's see what this week will bring. First of all, no Fed heads. They're in blackout until the next meeting. Next meeting is the 11th and 12th of this month. Not sure how, but you will get one Fed head on the commencement circuit. I'm waiting to figure that one out, but I would not expect so much. She did quote Dr. Seuss last month at a Georgia College commencement. Oh, the places you'll go. But don't fret, there's plenty to move the markets. Let's start with jobs. Is the first week of the month, so Friday will bring non-farm payrolls, and that will be the one watched most closely. Before that, we'll get JOLTS on Tuesday, ADP on Wednesday, jobless claims and continuing claims on Thursday. Friday is, of course, going to put the icing on the labor market cake, payroll, average hourly earnings, unemployment rate, so much to hear and see. Throughout the week, we'll hear some important eco data from the U.S., including manufacturing and service PMIs, but most eyes are going to be on labor, and so we'll see what that does. Watch Thursday from news from across the pond. The ECB is widely expected to step away, or should I say step ahead of the Fed, and cut rates. This is expected, but it will be a nail biter. If they do not come through, we may see some foreshadowing what the U.S. market's reaction will be if they don't get what they want. Sounds like a spoiled child? No, not far off. The algos. We'll have to see what happens. I think that one of the important news items. This is going to be one of the important news items this coming week. We're going to get some important earnings this week too. But as last week proved, the shoulders of these companies, one or two, are not strong enough to hold up the markets in the face of a strong headwind of rising rates. So we're going to have to see more news from NVIDIA over the weekend, and we'll see how that plays out. The Wall Street Journal ran with the headline, AI has been massively overhyped. So those may just be fighting words. We'll have to see how the markets react. Final reminder, this is very short-term news and in the weeds. That's what these Monday market updates are. We're looking for what your goals are and how to plan accordingly. Short-term market moves are often opportunities, regardless of direction or depth. So please keep in touch. As I started today, we have 1 month to go in this first half of the year. Please watch the Friday videos for planning ideas and tips, and call or email soon. Other resources are on the website as well. For now, have a great week.